As people age, it becomes increasingly important to plan for future long-term care needs. Asset-based long-term care insurance is a financial safeguard that can help protect personal wealth, while providing peace of mind. Unlike traditional long-term care insurance, asset-based policies offer additional features that allow policyholders to accumulate cash value or receive a death benefit if long-term care is not needed. Read on to learn more about the benefits, features, and target audience for asset-based long-term care insurance. What is asset-based long-term care insurance? Asset-based long-term care insurance, also known as hybrid long-term care insurance or asset-based lieutenant colonel insurance, is a type of insurance that combines features of traditional long-term care insurance with asset-based options. Simply put, it offers a financial safety net for long-term care needs while also providing protection for personal assets. Unlike traditional long-term care insurance, which solely covers the cost of care, asset-based lieutenant colonel insurance allows policyholders to build cash value over time. This means that if long-term care is not needed, the policyholder can still benefit from the accumulated cash value or leave it as a legacy for their beneficiaries. How does asset-based long-term care insurance work? Asset-based long-term care insurance works by combining traditional long-term care insurance with asset-based features, providing a financial safety net for the future. These policies offer both long-term care coverage and an investment component that can accumulate cash value over time. The cash value can be used to pay for long-term care expenses or can be accessed as a source of funds for any purpose. In addition to the cash value, asset-based long-term care policies can also offer a death benefit, a payout to beneficiaries in the event of the policyholder's death. The amount of long-term care coverage provided by asset-based policies is typically based on the amount of cash value in the policy, and the insured can choose the level of coverage they want. Some policies also offer the option to add additional coverage through a rider or endorsement. Who should consider asset-based long-term care insurance? Asset-based long-term care insurance is an excellent option for individuals who have assets they want to protect while planning for their long-term care needs. It is also suitable for those who want to avoid Medicaid and ensure they have access to high-quality long-term care services in the future. It is also suitable for individuals who want to have flexibility in their long-term care planning. With asset-based long-term care insurance, policyholders have the option to access their policy's cash value for any purpose, not just long-term care expenses. This allows for greater flexibility in the use of their policy's benefits. If you are looking for a long-term care insurance policy that is linked to assets, asset-based long-term care insurance should be a top consideration. This type of policy allows you to protect your personal wealth while planning for your long-term care needs. Alternatives to asset-based long-term care insurance. While asset-based long-term care insurance offers unique benefits, it may not be the best option for everyone. Here are some alternatives to consider. Traditional long-term care insurance. Traditional long-term care insurance is a standalone policy that provides coverage for long-term care needs. Unlike asset-based long-term care insurance, it does not have an investment component or a death benefit. However, it may be a more cost-effective option for those who prefer to pay a lower premium for coverage. Self-funding. Self-funding involves using personal assets or income to pay for long-term care needs. While this option offers flexibility and independence, it may not be feasible for everyone. It requires careful planning and saving in advance to ensure that enough funds are available to cover potential costs. Medicaid planning. Medicaid is a government-funded program that provides long-term care coverage for those who meet certain eligibility criteria. Medicaid planning involves arranging one's finances to qualify for Medicaid benefits, while preserving as much personal wealth as possible. This may involve transferring assets to a spouse or family member or setting up a special type of trust. However, eligibility requirements and rules can be complex and vary by state. It's important to consider the pros and cons of each option and consult with a financial advisor or elder law attorney to determine the best course of action for individual circumstances. Learn more about asset-based long-term care insurance. Antrim Insurance. In conclusion, asset-based long-term care insurance is a valuable tool for protecting your wealth and planning for long-term care needs. By combining features of traditional long-term care insurance with asset-based options, this type of insurance offers flexibility and peace of mind. It is a suitable choice for individuals with assets who want to safeguard their financial security while planning for the future. When choosing an asset-based long-term care insurance policy, it's important to consider coverage options, premium costs, and company reputation. It's also important to address any misconceptions or concerns, and to be aware of potential tax implications. Although there are alternatives to asset-based long-term care insurance, such as self-funding or Medicaid planning, these options may not be as cost-effective or comprehensive. We encourage readers to consider asset-based long-term care insurance as a valuable financial tool for protecting their wealth and planning for long-term care needs.